Thanks for joining us. I'm Marlon Bowling with you as we take a look at our ag commodity trade on a Tuesday. And remember, we'll get our crop progress and condition reports in about 45 minutes from right now. They did not come out yesterday because of technical issues, USDA said. So we'll have those numbers coming up. Right now on the corn, let's take a look at what we're doing. We've been a little easier here during the day. We're still a half lower at 366 3/4. And on the soybean trade so far this morning, November now trading 7 3/4 lower at 837.5. And on the wheat trade in Chicago, currently December down 8 1/4. We're at 520 per bushel. Kansas City wheat is also weaker today, where we have December down 7 3/4. We're at 523. And Minneapolis wheat, we'll check that out too. Spring wheat on December down 3 1/2 at 576.5. Cotton market has been under pressure today. So far, we're down 146 points on December cotton. We're at 82.39 cents per pound right now. Brian Hoops is with us. He is with Midwest Market Solutions in Springfield, Missouri. Brian, we had a couple announcements of export sales overnight. One was good, one was not so good. We had an overnight sale of corn and an overnight cancellation of soybeans. So what we ended up with was corn at 138,000 on the plus side to South Korea, and soybeans a minus 192,000 tons to unknown destinations. So the market doesn't know what to do with that, obviously, today.
Right, and we had yesterday a sale of beans to an unknown destination, a little bit smaller amount than what was canceled today, but beans finding a little bit of pressure here. There's some harvest that's beginning. We've had some customers, especially up in the Dakotas, where they are most concerned about frost. They plant a little bit earlier soybean. They are in the process of starting to combine right now. We've heard a lot of 40s and 50s, some in Iowa reporting some 70 bushel beans as well, all the way down to 40s because of too much rain in some areas in northwest Iowa. So a lot of variance in soybean yields, and I think we're going to see a lot of corn harvest coming off this week. I did a little traveling last week and saw a lot of fields in that northern Missouri, southern Iowa area that if they haven't gotten excessive rains last week, they're going to be primed for some harvesting this week. And in fact, we've even heard clients in the Dakotas talk about harvesting corn already this week as it's churned and ready to go.
Well, a little over 1 day from right now, we'll have our numbers from USDA for the crop production and supply and demand report. What are you going to focus on first?
Yeah, we'll have the yield numbers, ending stocks numbers, and the yield I think will be one of the key things that the trade will be looking at first of all. They're looking for corn yield reduction from last month. Now, history tells us that once a crop gets bigger, it tends to get bigger again. So a reduction in yield potential for corn would actually fly in the face of what historically has happened, because we saw a big jump in corn yield from the July to the August report. In this same thing in soybeans. From July to August, a big jump in soybean yield potential. Trades expecting another jump in yields for soybeans in this report because of good growing conditions to end the month of August. So there's a surprise that may be in that corn number. If we do actually see another increase, or at least a steady number, that could be a little bit bearish to the trade.
Really? Okay. Well, thanks, Brian. We'll come back in just a moment, and you and I will take a look at our cattle and hog markets on the other side of these messages. Don't go anywhere. We'll have Brian Hoops when we come back. Well, we're talking with Brian Hoops, and he is with Midwest Market Solutions in Springfield, Missouri. I wanted to take a look at the dollar index because we checked a little bit ago, and it has been firming up a little bit today. And September futures on the dollar are at 95.280. That is up 170 points right now. Possibly more importantly is the fact that crude oil has surged today. West Texas Intermediate crude oil up $1.36, and we have October trading at 68.90 per barrel right now. And a lot of times that spills over into the heating oil trade. That's, of course, how we trade our diesel fuel in ag country. And we have October trading 3 cents higher on diesel fuel today at $2.24.9 per gallon. Just wanted to point that out. Go back to Brian Hoops of Midwest Market Solutions. This surge that we're seeing in the crude oil and heating oil trade today, that's definitely impacting our diesel fuel prices. Brian, is that related to the hurricane or other factors?
I think it's almost 100% related to the hurricane. It's moving into the, regions that we could potentially see some disruptions in production and crude oil and mining of the oil itself in the Gulf. So definitely impacting it here. typically hurricanes have caused big price surges in crude oil futures. And I think that's what we're seeing here today rather than any reaction or potential moves ahead of the EIA report tomorrow.
Cattle market has been kind of weak here today. We'll take a look at futures on live cattle first in Chicago right now. We'll go ahead and bring that up. And we have that October contract now trading 85 lower at 109.30, and December down 47, now down 44 at 113.98 per hundredweight. And now you have February down a dime at 118.42. Kind of a quiet trade, though. It hasn't ventured very far here.
No, it really hasn't. Most of the features been Goldman roll type trade. Traders are getting out of long October positions and moving to long December positions. So that's creating pressure against the October and some buying interest in the December contract. You can see the open interest is slowly shifting from October to December as markets and traders prepare to be long that December contract. So, yeah, we're closely watching the volume. Open interest, it hasn't reached full market yet, but slowly it's in the process. Trade's looking for cash trade to be steady this week, and that should be supportive to those October futures after the Goldman roll ends. Right
now on feeders, we have September down 34, October down 25. We're at 152.43 per hundred, and November down 36 at 152.52. Lean hog trade, of course, all eyes on the impending storm in the Carolinas, and we had been lower and higher today. Very, very choppy market. October lean hogs down 27, December down 32 now at 55.38. What's going to rule the day in the hog market?
Yeah, that hurricane once again going to hit the parts of North Carolina and really impact a lot of hog production there. Last time we had a hurricane of this magnitude, there was a lot of death loss in North Carolina, and I think the market is trying to prepare for that as well, as we could see some ramifications of that. So the hurricane that is really impacting a lot of our markets. We've talked about a lot of producers in the Carolinas of corn and soybeans trying to get as much harvesting done as they can before that hurricane hits landfall.
That's very true. All right. Well, thank you, Brian, for weighing in on the markets today. Brian Hoops, he's with Midwest Market Solutions in Springfield, Missouri.